This is a video for Sky that I met in Holland, and she was talking about Tesla on our meetup. She still invests in Tesla and believes it's going to go high. She doesn't want to miss out if it's going higher, and she has a large exposure of about 40%. Could you turn your window a little bit up, sir? I think it's very important, Sky, to sell Tesla, of at least sell down a large exposure at current valuations, around $2,000. Yes, it is very important. I don't know how much profit you've made on it, at what price you entered, but that's actually of no importance. Why do I strongly recommend this is because several reasons, but Tesla is, according to the logarithmic regression, and I made videos on for Tesla also, where you plot a line of the average prices of the past, and you compare actual price with that line, with the average price of the past, then you can see whether current price is seriously undervalued compared to the trend line or seriously overvalued compared to the trend line. And we are at not serious overvaluation, but extreme overvaluation according to that trend line. Fair value, what was it? Is around what was it? $600, $700, $800 or so currently. I would have to do the calculation again, but we're a lot higher. And if you look at previous bubbles in Tesla, which happened, we have a history to look back to, and that's very important because Tesla is a very bullish story. Indeed, people say it can go to 1 trillion, 2 trillion, 3 trillion, and it is true. It will actually likely go there if Tesla continues to grow the way it does. But nothing goes up in a straight line, and it does take time to reach such extreme high valuations. It is an extreme high valuation because it's a higher valuation than the highest. It would become the most valuable company in the world. That's not accomplished in 10 years. It's accomplished maybe in 20 years, 30 years. So it's extremely overvalued, even compared to the previous Tesla bubble. It is more overvalued even today. The previous Tesla bubble was when Tesla in 2010, 11, 12, about 10 years ago, when it went to the stock market, because it started around 2006, 7, but Tesla only went to the stock market around 2010 or so, and then it was sideways for 2-3 years, while also revenues went up a lot, and then suddenly exploded, and it went from $30 to $300 or so, only in half a year or so. And then it was also seriously overvalued compared to the trend line, and the same is today the case, but even higher. And at the time when we had the first bubble in Tesla, you could say the same. Like, people that saw the vision of Elon Musk, that saw the realization at the time, they had released the Model S successfully and selling. Oh no, it was not the Model S, it was the first, the Roadster. They had released successfully the first electrical car that was a pleasure to drive, and didn't look like a scooter or an ugly piece of shit, or a hybrid like Prius was at the time. Yeah, it uses electrical, but it's a hybrid, so you combine two motors in one car. That's not the future. But Tesla was the first to really release a car that was electrical and cool, and so they had done that already and were selling that successfully already. And so people with a vision could understand Elon Musk, his his plan to really conquer the world with electrical cars and to step it down, make the models cheaper and cheaper to reach a broader and broader market. So it was the same vision at the time as it is today. Okay, it has broadened. Today you have the self-driving was not the case at the time, like that was not developed at all. Today they're busy even with solar in the home, and they have, of course, they have grown a lot, but they are also valued a lot higher today. They are not valued. They were actually valued only 3 billion at the time, 100 times less. And then you had a bubble there that went from 3 billion to 30 billion, and I went sideways for 5 years around 30 billion, and now we went up from 30 billion to 300 billion or 400 billion. So again, a 10x. Yeah, it's clear that we are in extreme overvaluation, even for a very bullish company like Tesla. That's the first reason why I believe it's very risky to hold a large exposure in Tesla, because when you are extremely overvalued in any investment, it will very likely correct a lot. And in the case of Tesla and tech in general, but Tesla specifically, it seems to be, if you look at the history, that correcting a lot means basically, well, yeah, it can do a minus 50%, but it won't go do a minus 80% like crypto does, no. But a minus 50% has happened in the past, and then go sideways for 5 years. That's a very long time. That's a lot of lost opportunity there. Especially in today's climate, where you still have lots of bargains in the stock market. We are just coming out of a crisis, still half in it, so you can invest that money in great value today. And even if you don't like value stock, in growth stocks, tech stocks, there are probably also still great opportunities. For example, there is this Lemonade insurance company that's promoted by Chicken Singapore Genius YouTube channel. Yeah, I mean, that's like when Tesla launched at 3 billion in 2010. Well, that's what happened with this company. It just launched, and it shows at 3 billion on the stock market. It hasn't gone up yet, and it shows great growth in revenues. Another reason why I believe it's very risky to hold Tesla is that people don't realize this, but Tesla really needs capital to grow. It needs to raise capital to grow, to finance its growth. Tesla is not a cash maker. It basically spends all the money that it earns, and part of that goes into growth, yes, but it's not enough. They need more money to grow. They are not making enough money to self-finance their growth. And that's why they have been raising capital in the past, every year or so, $1 billion or so, to finance all that. That's a very different situation, for example, with Amazon or Apple, that have always self-financed their growth. They could finance their growth with the profits that they were making or with the revenues that they were making. That's not the case with Tesla. It's a big difference, because that means that Tesla will very likely go to the market and issue a lot more shares, or maybe not a lot more shares, but maybe 5 or 10% more, and on the stock market and to raise capital that will be competing with your shares. If there is more supply coming on the market of shares, then that will likely put a downward pressure. Another thing that people totally dismiss, and in general I do believe that in Tesla there are way too many fanboys. There's also a red flashing indicator that likely a lot of money was being made there. Yes, check, that's the case. We have a 10x just done the past year, and that attracts a lot of fanboys, people that think that it can only go up, and people that really put their hat in the sand about the negatives, and always turn critiques, even fair critiques, dismiss them or turn them into a positive. But that's not fair. Tesla has some negatives that actually are quite unacceptable, in my opinion. For example, I believe that Elon Musk sells his services way too expensive. The option packages that he has negotiated with the Tesla board are just unseen. Like normally a founder of a company that has already a big share in a company, like 10, 20, 30%, does not ask for options. You give options to incentivize employees that don't have a stake in the company yet, and you want to give them opportunity to become rich, and you're not going to do that via salaries, of course, because you pay tons of taxes on that. So you give them options so that they can earn a piece of the company, they can earn shares if they work hard. But you don't do that with founders and people that already have a big stake in the company. Yet Elon Musk insisted on that, and not just a little, like billions of dollars of shares that he will earn as if he succeeds in raising the value of the company. And he is succeeding, so that means that's a bill right there of billions of dollars to pay to Elon Musk extra. Basically issuing 5, 10, I don't know how, I didn't do the calculation, but 10, 20% more shares or so just for him. And then you can say that, yeah, but he's the founder, it doesn't matter if he gets more shares because he won't sell them. That's also not the case. He literally says that he will actually use all his wealth to finance going to Mars. So it will be sold. Maybe not now, maybe only in 10 years, but probably gradually. So that's also a negative for Tesla. Fanboys totally dismiss this and say that he earns this, but then why shouldn't Bill Gates or Steve Jobs or Jeff Bezos have done that? Why not? I mean, they are already the richest people in the world, have been with the old model of not getting more shares as they succeed. So they should then probably do that too. All entrepreneurs in the future should probably do that too then. I'm not sure that's gonna fly. Stockholders like also take a risk. Like if you're a big shareholder or in a company, while all the other shareholders take the same risk as you, but they don't get the options. It's only Elon Musk that gets the options. Okay. Another aspect is that that I find bearish in the short term. I believe in the long term Tesla will do very well and will indeed be worth current valuation, and I hope and I think it has a very good chance to become indeed the biggest company in the world in 10 to 20 years. But there are some negatives here that really need to be pointed out in order to see that it is not just having this stock. The other negative is customer support. It's not good. If you look at reviews online about Tesla, ask to people. Some people are very happy with the customer support, but you have lots of people, way more than other brands, that are really not happy with Tesla customer support, especially with the parts issue. When you destroy a piece of your car, a small bumper fender, for example, getting that bumper takes months often, or a light, and you can't even use the car in the meantime. You're not legally in order. And so actually, if you want to use a Tesla car intensively, like for example a taxi company, well, you actually need to buy two for the price of one, for the use of one. You pay the price of two and you only get the use of one car, because there's always one that can't drive because you're waiting for parts for months. So that's also a negative that Tesla has not been able to solve, still not yet, in like the 10 years that it's existing. What's going on there? And then also what I notice is that Elon Musk is like, he's a bumper. He has a big ego. Yeah, so for example, He has a big ego, and for example, Porsche released the Taycan, which is a really well done car, the first full electrical car of Porsche, and it drives great. It drives better than a Tesla. It's much more fun to drive as a Tesla, but it misses certain things that Tesla has, like self-driving. No, it has also a better interior, you could say, but it still has some traditional elements, like 3 clocks in a car is of course not interesting, but it has 2 seats in the back. It's actually a sports car. Tesla failed to release a sports car. They don't have a sports car for sale, and they are selling a dream with the Roadster 2.0, but it's already selling that since 2017. That's now 3 years. And it's been delayed again, and they have put the Roadster in front, no, the Cybertruck in front, and so it will not be 2020, maybe 2021, 2022, and only then they'll have a sports car or a supercar. Until then, not, and they have not been selling the first Roadster now. Like they don't have a sports car already for 5 years or 7 or 8 years. So that's a failure of Tesla, and Porsche took advantage by releasing a great sports car before them, before the Roadster 2.0. And it has certain elements that are actually better than Tesla. The drive is better, I hear. I haven't tested myself, but I do believe so. They also solved the sound problem. That's a bit the problem with these electrical cars. They're so silent, you miss the pleasure of driving, and Porsche has implemented that by adding some or by making the sound of the electrical engine more loud through the sound system, which is fun to drive. They also have a sports car that's a 4-seat. You can put in the back 2 children. It's a bit like the Porsche, the other Porsche there, the long Porsche. So that's good, because yeah, it really solves you want a great car to drive. Your choice is basically between a Tesla and a Porsche. You can take a pumped Porsche, sorry, a pumped Tesla, like a P100, Model 3 or Model S. You can put the window a little bit open. Sir, it's very warm here, huh? Well, it looks better. The Porsche looks better on the outside than the Teslas. So in design, Tesla has not been standing out there designing sedans. The Model 3, the Model S, they are sedans. The Model X looks good, but yeah, I mean, that cost also $120,000 out of the box. And it has issues with the doors, lots of technical issues, which you really don't want to have with Tesla, considering their customer support is not that great or not reliable. Sometimes it's great, sometimes not. And of course, so I would say that Porsche has released a competitive offer. Yes, it's very expensive. It costs $200,000, but for the kind of people like me that want to don't mind a higher price, if that means they get what they want. Because for me, like a Tesla, no, I don't want to buy a Tesla because I don't want to own a sedan car. I prefer to take Uber or taxis if I want to have a sedan experience, and I don't have to drive. I can work a little. But when I want to drive and have fun, I would rather have the Porsche Taycan than the Model 3 or Model S or Model X, even though they drive the same speed. Something that Porsche did actually better than Tesla is that they have a reliable speed. Like the Porsche can drive its maximum performance the whole way through, whereas with Tesla not. It's only shortly, and then you cannot drive so fast or accelerate so fast anymore. But what was very interesting was the response of Elon Musk to this release of this car. Is that he congratulates Porsche, but then, and that's nice, but then he also says that, well, we are faster, and he sends to the Nürburgring in Germany, where Porsche had a record with the Taycan as fastest electrical car. So he sends his team with a pumped up Model S, I think, to beat that record, and they beat it indeed. But it was not it was clearly not a car that's for sale for the public. So that's just not fair. Like, Porsche uses a car that's for sale for the public. That's what you need to compare to. Everybody can accelerate a car. That's not a fair comparison. So he did that, which shows to me that his ego is a little bit bigger sometimes than his feeling for fairness. And then another indicator for bubble indicator is that people predict much higher prices, even though it just already went up a lot. And it's clearly the case here with Tesla also. Many people talk about trillions of dollars valuations now and believe that it's going to go straight to there. It's also a big red flag. So all these arguments given to Sky and other people that still hold a big position in Tesla, I really don't think that's wise. I think actually you should have no exposure to Tesla because the risk reward is not good anymore. The potential, upwards potential, is very limited since it just tenfolded the past year. Yeah, it can double again. Like I thought the top was 1,500. Oh, we're already at 2,000. Maybe we go to 3,000. But that's typical for bubbles, that they go higher than expected. But to hold on to your shares because you don't want to miss the remaining profits is not wise. It will lead you to hold the bag because there will come a point where it starts to reverse and collapse, and then you're not going to sell also because now the price is lower than you could have sold, and so you think it will go back up. You hope, but it doesn't. It only does a little and then go back down, and so you end up holding the bag for many years. You have to sell when the getting is good, and certainly a piece. And I personally, for all these reasons mentioned, I'm planning to short Tesla, something that I would not have done and in the past because tech companies are very dangerous to short. Yeah, I think there's a very strong case to be made here that Tesla will likely go sideways for many years. And even correct and go sideways. So I think it's worth it to go short, but not with a big exposure because it's too dangerous. Let's say you go 10% short and you're wrong. It's always possible. It's not probable, but there is this very small chance, 5% maybe or 10%, that yes, it goes straight to 4 trillion or 1 trillion. We're at 400 billion, it doubles again, we go over 1 trillion over the next few months, next half year. It's possible. If you have a 10% short exposure, that means you lose not 10% but 20% or 30% of your portfolio you lose, and you get margin calls all the time. You have to sell other investments to finance it. So I'm going to take a limited exposure, and of course shorting a stock, the nice thing about it is you get that, you borrow the stock, you sell the stock, and you get the cash of that sale. You can use that to invest in other things, and you have an obligation to pay back those shares or give back those shares later. But the risk is, like I just mentioned, that you have unlimited losses and actually limited upwards potential also. Because you can only make a doubling. Only if Tesla go to zero you make 100%, which is also very unlikely. So the other way to short is to buy put options. So I plan to go maybe 10% total exposure, half short the stock and half buy put options on Tesla. That's my plan for Tesla. I hope you guys enjoyed it. Have a great day.